this video, I'm going over how to enter your rental property in TurboTax step by step, including depreciation, and how to enter a room rental. So if you rent out a room in a house that you own or rent, I'll be covering that too, something like Airbnb or Craigslist.
If you're new here, my name is Amanda. You're watching The Business Finance Coach, where I simplify all of this stuff because I don't believe that it should be overwhelming or confusing. And be sure to subscribe if you want to have my videos in your life on a regular basis. Now let's jump in and get started. To enter your rental property into TurboTax, when you log in, you'll be able to pick up where you left off, or you can watch my Getting Started video to see how to get to this point. But it's going to be under your federal tab, under income and expenses, and you need to enter it under federal. You can't just go enter it under a state. Income and expenses, here's our summary page. And you can see I selected it here, and we're going to click start to get started. If you don't see it here in your list of your income and expenses, then you need to go down below that, and you may have a show more button for this section, and you'll be able to find it in the category down here. You can see rentals, royalties, and farm income. So I'm going to come up here and go ahead and click start. So now they're going to ask us, do you have rental income? We'll say a yes. Now, the first question is, let's see if you're a real estate professional. So check out my other video about real estate professionals, but you can see it's pretty clear here. We're gonna say none of the above and continue. So now they're going to ask us about our first property. So you want to give the property a name. You can see you can click hyperlinks to the right for more information, but generally I would describe it with the address. Now they're going to ask us what type of rental this is. Now, generally, you're going to say single family. That's going to be the most common thing to select here. If you own one apartment, you could say single family as well. See, it can be a unit. So this is going to apply to most things, unless you own like a building, that will be here. If you do commercial rental, that's here. Self-property is one business renting. So like you renting to your business, that would be here. Other, you can put in the description yourself, but generally you're going to choose the first one. So if this is the first year you started renting it, you check the box. If you sold it this year, you check the box and enter the details. If you rent out a room in your house, okay, this is where you check here. So you would still select that first option and then check this box. If you had used it as personal prior to turning it into a rental, this really only applies if you own the property. And all of the rules for rental property are really geared towards ownership. If you rent out part of your house, that's when you could be a renter.
To elaborate on this converted section, so you want to be sure to check that first box if you started using a personal home as a rental during the year, or vice versa, you stopped using a rental and you started living in it. When you check these boxes, it's going to change the questions that you get asked when you're adding your cost basis for the house, what you paid for it, for depreciation. If you miss these questions and you're trying to get that updated, you may be better off to re-enter the entire property over again, because TurboTax doesn't tend to be too good sometimes when these questions change the outcomes. Going back and changing it, you're better off to re-enter the section again.
Now here you can say I have passive activity losses carried over from a prior year. You have to enter those every year. With passive activity, you can't deduct all your losses. They're limited. And then I have at-risk losses carried over. So if you have either of those, you check the box and then you'll be able to enter them. So the question is, was this property rented out all year? And if you only owned it for part of the year, was it rented, all during that time? Now, generally, as long as you are trying to rent the property, that counts. Now they're asking fair rental price, meaning did you give someone a discount? Now they're asking about if we have an office that we use for a home office. Now they've added this over the years because things can get a bit confusing. So I'm going to say yes, I have an office I use for business. Now, if that's the case, then you want to be sure to divide out the portion of your house that is used for your home office versus that's used to rent. Because remember, I checked that box that I'm renting a portion of my house. Now I'm going to change that to leave that off, but if you leave it checked, you'll be asked those questions. Now in this case where we're renting out a room in a house, there's going to be, some of our expenses are not deductible, some of them are. So we can do the totals and let them calculate the difference. So they want to know the rental use percentage. So how much of the house is a rental? So if you take the size of your room, you divide it by the square footage of the entire house. So let's say 30%. Now what you can do is split the shared areas by the how many people are in the house, and then add that percentage share to the share for the room that they're renting. That's if they have access to the other areas in the house. And I have a spreadsheet template that walks you through all of that. Check out the link below and we'll click continue. And then let's find out if you're an active participant in this property. Now, the benefit of being an active participant, and this applies to any rental property, is that you can deduct a loss. So I'd say, yes, I'm an active participant.
So this active participation rule, if you meet this threshold, then you can deduct up to a loss of $25,000. That's total rental income minus total rental expenses equals net income or net loss. You can deduct loss up to $25,000, whereas that's normally limited because it's passive activity. Now, to meet that active participation threshold, you need to own at least 10% of the property. So this doesn't apply if you're renting a house or apartment and then renting out a room. It only applies to those who own the property, but you only need to own 10%. Of course, you only get 10% of the loss normally. The other part to qualify is that you actually made management decisions. You decided who the tenant is, you fixed things about the property, that sort of thing.
Now they want to know if we paid someone more than $600 because we need to file them a Form 1099 miscellaneous. I'm going to say no, but if you say yes, then they're going to ask you, did you file those forms? And you don't want to say no, you want to say yes, right? But you want to make sure you actually did that. Now they're going to ask if we're in a qualified disaster area. We'll leave none of the above. And now we're to a summary property about our 123 Lane Street rental property. And so now we can go into each section within here to enter the information. Now, when we are renting out a room in a house, unless we own that house, we're not going to take an asset or depreciation. We're going to take our rent under expenses for the entire house. So I'm going to say I'll choose what I want to work on versus walk me through everything. Like I said, I find it easier to just see everything and enter everything. So here you can go ahead and just enter all of your expenses.
Here you enter the entire cost that you paid for the property. Now, you don't want to include any amounts that someone renting from you may have contributed to these expenses. Many of these only apply if you own the property.
Miscellaneous expenses, you might have some you want to put in there, but sure to fit them in the category as best you can. Now we'll go into assets depreciation. So this is where if you bought furniture or appliances, this is where you can depreciate them over time. And because of Section 179, you'll be able to write them all off at once. And if they're less than $2,500, then we're just going to say, we'll say yes, they're less than $2,500. Now they're going to say, okay, do you have a consistent process for recording these and keeping track? And the cost of some items as shown on your receipts, less than $2,500. If we say yes, then we can say we want to take the annual election. Now, if we click, how does this affect my taxes? We can see what they're saying. Basically, if you have a loss in your taxes already, you might want to save these expenses for future years, which you can do by depreciating the assets.
Depreciating an asset means that you're going to spread out the cost as a deduction over multiple years based on its useful life as defined by the tax rules. And so, for example, appliances and furniture are 5 or 7 year property. A rental property itself, real estate, is 27 and a half years, whereas commercial for business is 39 years. The software will take care of this and ask you the relevant questions as you go through.
So every item I bought cost $2,500 or less. Or you could say some of the items were less than $2,500, some were more. If we say that, now they're going to ask us about improvements. That would be like if you did an actual remodel. Do you have any items for this rental part that aren't covered by your election? So yes, let's say yes. And now they're going to say, okay, you can enter an asset. Now, if you own the rental property, then you're going to set it up as an asset following these same types of questions. You would click rental real estate property. If we select tools, machinery, equipment, this is where we put furniture, things like beds, decorations. But again, if these are less than $2,500, you don't need to enter them here. You would only put them here if something you purchased was more than $2,500, and that's saying the individual asset was more than $2,500. So let's say we bought a really expensive bed for that room we rent. It was $3,000 and we bought it at the start of the year. So we'll just say we purchased it new. And when we purchased it, did we start using it for business or did we use it for personal first? Generally, it's more advantageous to start using it for business right away. Now they want to know, okay, when did we start using it for business? So we're going to say the same day we bought it, we started using it for business because we bought it for business. So now they want to know, do you want to spread this deduction out over many years? That would be the first option. Or you can deduct the value in full this year, which could be beneficial. Or you can do part of it this year and leave the rest to spread out over future years. So I'm going to say that we'll take the full deduction. And then they're going to ask you about your state deduction. So you want to be sure, if you watched my last video about setting up a return in TurboTax, you want to be sure that you entered if you earned any other income from other states in the My Info tab, because then it's going to ask you about that state here. If you go back and add a state, you may need to blow out your entire rental section and start over so that it prompts this question. Okay, you really want to move in the right order in TurboTax. We're gonna say the full amount. We want to take the $3,000. And if we click show details, we'll see that we took the entire cost basis as section 179. Now, once you get to this screen, this is where you'll list all of your assets over $1,500. And again, when you're renting out a room in your house, you're only going to add the house here if you actually own the house. Now you can enter your vehicle expenses here, and you'll find the vehicle expense video linked below for how to enter that for a self-employed or a business. And it's the same exact thing once you click start here for your rental property. Same thing for the home office as well, which when you click done with the rental property, that's when you'll be asked about the home office deduction when you're leaving the rental property section. We need to enter some of our rental income. So if we come in here, we'll say, yes, all of our income was reported on a 1099 miss. That's only going to happen if you're commercial property, probably, because otherwise people aren't required to file the form for personal reasons. So we're going to say no, we didn't get any 1099 miscellaneous. Even things like Airbnb, they don't report on a 1099. They do use 1099K. Now, you don't enter a 1099K. That's actually the company's responsibility to report that to the IRS. You're just getting a copy of it, but you want to make sure that you include that total amount in your rental income here. So let's say we got $40,000. Seeing as we bought a $3,000 bed. And when we got started setting up our rental property, we can get back to any of those questions by using this first section for property profile. So once we're done here, we'll click done with rental, and it's going to ask us, do we have any other situations happening here? Disposed of geothermal property because you got deductions in the past. You have no money in this rental property that you're at risk of losing. That just means that someone else is involved owning some of the assets. They're going to tell us our net property. We'll say continue. And now they're going to say, is this qualified business income? So your net income from the rental property, it is going to be considered QBI. So this next section, this is asking us about very specific questions related to QBI, like if some of this income doesn't really qualify, deductions from other topics need to go here. The business has wages, meaning do you pay anyone a W-2 employee wage? Because all of this information is used to calculate the QBI deduction. Now they're asking if this is through a single member LLC, then we need the name and employer ID number. Now they're saying, well, listen, you didn't enter that last information. If your income is going to be over $160,700, then you need to enter it. I'm going to say, no, unfortunately, we don't have that much. Now they're going to calculate that QBI deduction for us. So out of that $35,110, we get to deduct $7,022.
There are some basic questions that I'm going to skip over here.
Okay, so now we can see a summary of the information we've entered and then the expenses. I'm going to say done. Now we're done, and you can see this is a summary of our rental properties, and so you just click add another rental to add them in. Okay, so that's all for how to enter a rental, renting out a room in your house in TurboTax, like for Airbnb. If you have any questions, I'd love to hear from you. If you know someone who needs this information, do share this video with them. Give it a like if you enjoyed it so YouTube knows. And I'd love to hear from you in the comments below if you have any questions or comments. Otherwise, I hope to see you in the next video. Bye.